equities are wildly overvalued by any measure that you want to use. And corporate insiders are selling at a record pace right now. They who see what's happening within their own companies are dumping their shares at a rate that's almost never been.
You're watching Silver News Daily. Subscribe for more.
Did you know that silver might just be the ultimate weapon against financial chaos? With stock markets overvalued, debt spiraling out of control, and geopolitical tensions on the rise, John Rubino says silver is more than just an investment. It's her financial lifeline. But here's the twist. Silver's industrial demand could soon outstrip its supply, creating a perfect storm for skyrocketing prices. Sound unbelievable? Stay with us as we uncover why silver might be the key to surviving and thriving in a volatile world.
War III after all, that kind of relief rally, because Trump and his guys are at least giving lip service to ending the Ukraine war, which is where humanity is really at stake. We're fighting a proxy war against the world's other major nuclear power. And that means any kind of miscalculation is an existential threat. So take that away, and it's no surprise that a lot of people bought stocks because they were feeling more optimistic. But then, relief rallies never last very long because you always have to come back to reality. And where we are now financially and in terms of equities valuations, if we're going to stay with the stock market, equities are wildly overvalued by any measure that you want to use. And corporate insiders are selling at a record pace right now. They who see what's happening within their own companies are dumping their shares at a rate that's almost never been seen before. So that's a very big signal. And there are other related signals. Warren Buffett is raising cash pretty aggressively. He's got more cash on hand than he's ever had before. And he's been selling stocks in order to raise that cash, of course. And there are lots of other things out there that point towards an end to this stock bubble. And I think the biggest one is that the Fed is now talking tough. They did cut interest rates just lately, but it was along with a lot of hawkish rhetoric. In the sense that they're talking about maybe not so many increases in the year ahead as before. And that makes a lot of sense considering that retail sales just came in stronger than expected, and inflation by most measures is above the Fed's target, and some of those measures are trending up and not down right now. Interest rates jumped in the last couple of weeks, and the 10-year Treasury yield in the U.S. is now back to 4.5%, up from like 3.6% during the relief rally. And then equities, of course, are wildly overvalued. Home prices are at record highs. Bitcoin just broke 100,000. And, you add all that up, and this is the kind of environment where a central bank would normally be tightening aggressively. And the fact that our central bank just cut and then promised cuts in the future, just not as many, means that our central bank in particular is going to have a ways to go before they confront reality and actually have to start tightening. And if interest rates stay this high while they're confronting that reality, that makes stocks unattractive. The yield on the S&P 500 is about 1.8% right now. And with today's interest rates, you can get a bank CD that'll pay you 4.5%, maybe more in some cases. So if you're a nervous investor, what are you going to do? Obviously, a lot of people are going to take the bird in hand that is 3 times as high as the bird in the tree, and they'll sell stocks and put that money into medium to short term fixed income. And that's how a lot of bear markets get started, where valuation just gets to the point where the yield on stocks isn't attractive anymore. And people make the logical shift and, leaving everything else out, all the crises that could happen out there and all the ambiguity in the world. Stocks are due for a big correction.
Stock markets are riding high, but are we ignoring the storm brewing beneath the surface? Insider selling is hitting record levels, and even Warren Buffett is stockpiling cash instead of investing. John Rubino warns that the markets are dangerously overvalued by every measure, corporate earnings, price-to-earnings ratios, and more. Could this overconfidence be leading us straight into a correction or even a crash? And here's something even more startling. Retail investors, hedge funds, and dumb money are piling into equities, while insiders, the so-called smart money, are heading for the exits. Does this mean the bubble is about to burst? Share your thoughts in the comments below. Do you think the markets are set for a correction? Or is this just fear-mongering? Let's dig deeper to uncover the real signals behind these market trends and explore what John Rubino says about safeguarding against these risks.
Of government can ride it out and make the best of a bad situation, but another kind of government can just spin out of control and become authoritarian in a heartbeat in a situation like that. So here is hoping that Trump and his people are relatively wise in the face of the crisis that's coming, and they manage it, because you can have the market impose a currency reset on you in the form of a gigantic financial crisis, which just, forces a lot of debt to go bankrupt and banks everywhere and other financial entities to go bankrupt. Or you can have a government see it coming and switch to a new monetary system, do the monetary reset in anticipation of a big giant crisis, and see what happens, And I hope that our guys do something like that in the next 5 or so years. An analogy is Hitler and Napoleon, who came to power after big financial crises in their countries, and FDR, who came into power during a financial crisis in the U.S. in the Great Depression. Now, he did a lot of things that especially gold bugs don't like, but he managed his way through the Depression and World War II. And then, we went back to being a democracy where you have elections every couple of years and new people come in. He stayed in power for longer than you would normally expect a president to do. But other than that, he got us through this thing and we came out as the America that we recognize. So hopefully Trump and his people adopt the FDR model instead of the Hitler or Napoleon model where, everything just falls apart and we're desperate for a strong leader and somebody ends up being a de facto dictator in order to fix things that seem unfixable. So that this is a scary time for the U.S. because there are a lot of historical analogies that are terrifying for what's coming. And, we got to hope that the people we have in charge are wise enough to get us through this so we can go back to some variation of normal 5 or 10 years from now.
Debt. It's the invisible weight dragging the global economy toward a breaking point. In the U.S. alone, government debt has soared to historic levels, surpassing 120% of GDP. With interest rates climbing, the cost of servicing this debt is becoming unsustainable, and the federal deficit is ballooning faster than ever. John Rubino points out a chilling truth. This isn't just a financial issue. It's a structural crisis. Think about this. The Federal Reserve is stuck in a corner, cutting rates to stabilize markets while simultaneously battling inflation that just won't quit. But here's the kicker. If another trillion-dollar bailout is needed, where does that leave the U.S. dollar? Could this debt spiral be the catalyst for a monetary reset? Rubino believes silver plays a crucial role here, offering a tangible hedge against the devaluation of fiat currencies. So, what's your take? Could debt be the final domino that triggers the collapse? Let's explore the implications further.
Of government can ride it out and make the best of a bad situation, but another kind of government can just spin out of control and become authoritarian in a heartbeat in a situation like that. So here is hoping that Trump and his people are relatively wise in the face of the crisis that's coming, and they manage it, because you can have the market impose a currency reset on you in the form of a gigantic financial crisis, which just, forces a lot of debt to go bankrupt and banks everywhere and other financial entities to go bankrupt. Or you can have a government see it coming and switch to a new monetary system, do the monetary reset in anticipation of a big giant crisis and see what happens, And I hope that our guys do something like that in the next 5 or so years. An analogy is Hitler and Napoleon, who came to power after big financial crises in their countries, and FDR, who came into power during a financial crisis in the U.S. in the Great Depression. Now, he did a lot of things that especially gold bugs don't like, but he managed his way through the Depression and World War II. And then, we went back to being a democracy where you have elections every couple of years and new people come in. He stayed in power for longer than you would normally expect a president to do. But other than that, he got us through this thing and we came out as the America that we recognize. So hopefully Trump and his people adopt the FDR model instead of the Hitler or Napoleon model where, everything just falls apart and we're desperate for a strong leader and somebody ends up being a de facto dictator in order to fix things that seem unfixable. So that this is a scary time for the U.S. because there are a lot of historical analogies that are terrifying for what's coming. And, we got to hope that the people we have in charge are wise enough to get us through this so we can go back to some variation of normal 5 or 10 years from now.
As if overvalued equities and unsustainable debt weren't enough, geopolitical instability is adding fuel to an already raging economic fire. John Rubino highlights that global tensions, from the war in Ukraine to shifting alliances in the Middle East, are reshaping economic and financial systems in ways we've never seen before. These aren't isolated events. They're seismic shifts that could destabilize economies worldwide. Take the Ukraine conflict, for example. Not only has it disrupted energy and commodity markets, but it's also strained relationships between global powers. The ripple effects are felt everywhere, from spiking inflation to supply chain interruptions. Meanwhile, U.S.-China relations continue to deteriorate, with trade wars threatening to stall the global economic engine. Here's where it gets even more troubling. These geopolitical fractures are happening against a backdrop of rising nationalism and a fragmented global order. Countries are prioritizing self-reliance, stockpiling resources like gold and silver as a hedge against future uncertainty. Central banks are pivoting, with record levels of gold buying as a safe haven asset, indirectly elevating silver's role as a secondary safeguard. Rubino argues that in this era of unpredictability, silver's dual identity as a precious metal and industrial resource positions it as a crucial asset. It thrives in times of instability, much like gold, yet its industrial applications, especially in green technology, anchor its long-term demand. So here's the big question. As geopolitical tensions mount, could silver become the linchpin for financial security? Could its unique properties provide a shield not only for governments but also for individual investors navigating these turbulent times? The stakes couldn't be higher.
The monetary crisis that leads to the currency reset, they're baked in the cake. We've taken on more debt than any country can possibly handle. And that's got to play out. That's got to have the inevitable consequences. So even if you're a Trump fan and you're looking forward to having him come in and clean the swamp out and everything, and I would count myself kind of in that category. I like what I've seen from Trump lately. I'm also worried that he's an erratic guy, and I don't want to be responsible for every single thing he does. But I like the team he's building and stuff like that. I think a lot of good can come from this change in leadership and the new people that are coming in. But that doesn't mean that we fix the finances easily or at all. I can't imagine how any country can fix debt at 120% of GDP with interest costs going straight up and all the other things, all the other overvalued assets that are out there right now. And, you got to have a financial crisis just because of overvaluation in the housing market and in equities. And that is going to make government deficits go up from here, which we can't afford to have them do that. And then you got the structural deficit of baby boomers retiring. My generation is heading off into the sunset now and collecting Social Security and Medicare, which means government spending has to go up regardless. There's no way to actually cut government spending. I mean, even limiting it to an unacceptable growth rate is probably impossible just because of demographics. So all of that stuff means financial crisis is out there coming somewhere. A big equities thing leading to a bond thing, leading to inflation and bailouts and a currency reset. That's all out there. It has to happen. And there's no way around it. But there are, one kind of...
Silver is often seen as gold's undervalued cousin, but its industrial demand might just make it the star of the next economic cycle. John Rubino emphasizes that silver's applications go far beyond jewelry and investment. It's a critical component in green technologies and modern industrial processes. The numbers don't lie. Projections suggest that by 2050, solar panel manufacturing alone could consume nearly all of the world's silver output. Let's break it down. Silver's unmatched electrical conductivity makes it a cornerstone of technologies like photovoltaic cells and solar panels, electric vehicles, EVs, and 5G networks. As governments push for renewable energy solutions and EV adoption accelerates globally, the demand for silver is set to skyrocket. In fact, in 2024, silver's industrial demand surged by 7%, while production lagged behind at just a 2% increase. This mismatch is driving an annual deficit of 182 million ounces. But it's not just about renewables. Silver is also crucial for electronics, medical equipment, and even water purification systems. These diverse applications create a resilient demand base even in the face of potential economic slowdowns. TD Securities predicts that as industrial use rises and inventories shrink, silver prices could reach $36 per ounce by the end of 2025, and that's just the start. However, this demand-driven story isn't without challenges. Trade wars, changing subsidy policies, and geopolitical risks could create short-term headwinds for industrial consumption. Despite this, the long-term outlook remains undeniably bullish. So here's the takeaway. Silver's industrial demand isn't just a trend, it's a structural shift. As the world moves toward a cleaner and more connected future, silver is poised to play an irreplaceable role. Could this demand transformation be the key to silver's resurgence as both an industrial metal and a store of value? Let's find out.
Kinds of potential false flags that can happen between now and Inauguration Day. And, one of them could be some kind of terrorist attack. Another one could be some kind of geopolitical thing where some war somewhere ramps up dramatically. And there could be financial crises. There could be a gigantic derivatives bust or something like that, engineered by people who don't want Trump to be able to cut the size of the government. So a lot of stuff could happen. And I'm not predicting any one of them, but we're already seeing stuff like that. I mean, ramping up the Ukraine war on the way out the door doesn't make any sense for a president, or declaring a state of emergency in America's biggest state over something that has infected, 27 people or some crazy low number like that, like something that is beneath the notice of a governor in a state normally. But they're back at it again, because let's just say it. They loved having the power that was conferred on them by the pandemic. And they miss it. So they want to get back to something like that. So it's not a surprise that they're trying something like that. And we just have to hope that January comes soon enough without a major event that allows a lot of the incentive for these things to go away. But in the meantime, this kind of thing adds to the volatility in the financial markets and really increases what should be a risk-off perspective for a lot of people. I mean, we should be nervous with stocks at this level. We should be looking for ways to hedge against the bear market that almost always comes when equities are this overvalued. And to the extent that people are watching things going on out there in the world, this should reinforce that attitude, but it's not. At least not so far, As we're speaking today, Equities are way up again. They're bouncing back from the hard day they had a couple of days ago. So, who knows what everybody's thinking out there, but I know what they should be thinking. They should be really worried, and hopefully that kind of an attitude becomes conventional wisdom pretty soon, and people will pull back from all the risk taking that they're involved in now.
Silver's trajectory is being shaped by a unique convergence of market dynamics, making it a fascinating yet volatile asset to watch. Analysts like those from TD Securities and Harrius Precious Metals have offered bullish projections. But what's really driving these predictions? Let's delve deeper into the key forces influencing silver's performance. First, the supply-demand imbalance is glaring. For the fourth consecutive year, silver is facing a significant deficit, with demand outpacing supply by 182 million ounces in 2024 alone. While production grew by just 2%, demand surged by 7%, driven by industrial applications and investment interest. This persistent shortfall is expected to tighten inventories further, setting the stage for higher prices. TD Securities forecasts silver prices to range between $33 and $36 per ounce by the end of 2025, with potential peaks of $38, $39 in 2026. They emphasize that the metal's undersupply, paired with increased ETF buying during a typical Fed rate-cutting cycle, could accelerate inventory depletion. This is particularly significant given that silver often mirrors gold's movements, but with amplified volatility. However, the path to these higher prices isn't without hurdles. The Federal Reserve's tight monetary policy and a strong U.S. dollar have created headwinds for silver, as higher interest rates increase the opportunity cost of holding non-yielding assets. This macro pressure has kept silver trading below critical resistance levels, with analysts warning that sustained moves below $30.44 could trigger deeper corrections. Despite these challenges, silver's long-term fundamentals remain robust. As industrial demand continues to rise and geopolitical uncertainties persist, silver is expected to shine as both a safe haven asset and a commodity powerhouse. The gold-silver ratio, currently elevated, suggests silver remains undervalued compared to gold, reinforcing the case for its outperformance in the late stages of a bull market. But here's the real question. Will silver's supply constraints and rising demand be enough to overcome macroeconomic pressures, or will the metal remain trapped in the shadow of gold and the strong dollar? Let's continue unraveling this complex narrative.
Aristocracy or the deep state or the oligarchy, whatever you want to call it, or the uniparty, whatever you want to call the guys who have been in charge for the last 40 years and want to stay in charge, they're clearly willing to do basically anything. I mean, this is, the guys who are in charge now are in the same lineage that as the ones who assassinated JFK, okay? So you can go all the way back to them and find people in charge who are willing to do basically anything. So yes, ramping up a potential nuclear war with Russia, crazy as that sounds, is something they're actually doing now. They think of it as a negotiating tactic. You aggressively escalate the fighting in order to give yourself the best position for cutting a deal. But we're aggressively escalating the fighting with right on the border and inland with the world's other nuclear superpower. Is that worth another move on the chessboard? See, these guys are playing games. They don't actually seem to understand that they and their children are going to be incinerated in a nuclear war if they get this wrong. And, in the financial sphere, it's basically the same thing. We're running massive deficits now. The first 2 months of the U.S. fiscal year was by far the highest deficit for that period of time that the U.S. government has ever run. And remember, we're 15 years into an expansion. We've got equities at all-time highs, which means, we're generating lots of capital gains that the government can tax. Unemployment is near a record low. We've got more people working right now than ever before, which means lots of payroll taxes are flowing into the government. And yet we're running the biggest deficit of all time. We're on track for $3 to $4 trillion deficit if you just extrapolate the first 2 months of fiscal 2025 out, and that is also basically a scam designed to make things harder for the incoming administration. So yeah, these guys are not going to give up easily. And and the was it the bird flu that they just declared an state of emergency over in California?
What in the world? Another pandemic?
Yeah, well, it's pandemic version 2.0 coming, and that's completely within the range of possibility too. If California does it, it's a big chunk of the U.S. right there. And so it can't happen too soon for Kennedy to come in and clear out the people who are potentially running dirty tricks in the guise of national health care. But, there's no guarantee that any of this is allowed to happen because they're all...
When it comes to precious metals, gold often steals the spotlight, but silver might just be the underdog poised for a breakout. John Rubino and other market experts argue that silver's potential for explosive growth often outshines gold's steadier, more predictable movements. But what makes silver unique, and why might it outperform gold in the coming years? Let's start with the gold-silver ratio, a historical measure comparing the price of gold to silver. Currently, the ratio sits at elevated levels, indicating that silver is significantly undervalued relative to gold. Historically, during late-stage bull markets for precious metals, silver tends to outperform gold as the ratio reverts to its mean. Various precious metals projects that a reversion could see silver trading at $1.40 per ounce, a substantial gain from current levels. While gold is primarily seen as a safe haven asset, silver wears two hats. It's both a precious metal and an industrial workhorse. This dual identity creates opportunities for silver to benefit not only from economic uncertainty, but also from technological advancements. For instance, while central banks stockpile gold, the green revolution and advancements in electronics are driving industrial demand for silver, further differentiating it from its golden counterpart. But there's more to this story. Silver's higher volatility means it often mirrors gold's price movements, but with greater intensity. This makes it a higher risk, higher reward investment. In 2024, silver outperformed gold within the commodities sector, and analysts expect this trend to continue into 2025, especially as industrial and investment demand align. Of course, silver faces its own challenges, such as sensitivity to macroeconomic factors like interest rates and dollar strength. However, Rubino and other analysts argue that these are short-term obstacles in a long-term growth story. So here's the critical question. With silver priced so attractively relative to gold, is it time to shift focus from the safe haven to the potential outperformer? As we explore further, the answer might become clearer.
And hedge funds are way long right now. And those are two groups of people that qualify as dumb money at major turning points. So yeah, you got the wrong people piling into stocks, and the right people getting out of stocks if you assume equities are overvalued and they're going to go down. So yeah, that's a setup for a correction at a minimum and maybe a serious bear market. And given where valuations are right now, history says that a serious bear market is the thing that comes. See, then at that point, with the next bear market that causes the next recession, things get really interesting because it's completely possible that we've taken on so much debt in the last 40 years, and especially in the last 5 or 8 years, 5 to 8 years, depending on where you want to start this debt binge that we've been on. We're incredibly financially fragile, and it's completely possible that the fractional reserve banking, fiat currency regime that we instituted in 1971 is going to be called into disrepute. In other words, the experiment might end with the next big recession, equities bear market, and then resulting government bailouts. Because if this government in the U.S. that's already wildly over indebted has to throw another $10 trillion at the banking system to bail it out, which it easily might in the next bear market, then it's completely possible that people look at those numbers and say, okay, debt is rising parabolically. Interest rates or interest costs for the U.S. government are going straight up. And now they're going to just create out of thin air $10 more trillion to bail the banks out. Do we want to be in this currency? And so I think that's where the story gets really interesting. We clearly have a garden variety bear market coming just because of valuations and those other things we just talked about. But if that metastasizes into another great recession, another 2008, 2009, where lots of big entities are going to go bankrupt unless the governments of the world step in, it's possible that that's our last shot at that particular brass ring. We just can't keep going back to that well and keep doing that over and over again. And maybe people give up on this system. And so I think that's the thing we've been talking about for such a long time, the crack up boom leading to the monetary reset. I think there's a decent chance that we're staring at that over the next few years. And if so, it's financial history we get to live through, and terrifying for most people, and potentially really lucrative for the people who are positioned for it.
In a world fraught with economic uncertainty, geopolitical turmoil, and market volatility, resilience has become the watchword for savvy investors. John Rubino suggests that silver, with its unique blend of stability and growth potential, should play a central role in any strategy to hedge against systemic risks. But how exactly can you integrate silver into your portfolio to build the resilience? Rubino emphasizes the concept of becoming your own central bank. What does this mean? Simply put, it's about holding real, tangible assets like silver that retain intrinsic value, regardless of what happens in the financial system. Unlike fiat currencies, which are vulnerable to inflation and devaluation, silver's dual identity as a precious metal and industrial commodity ensures as enduring demand. For those new to silver, physical assets like coins or bars are a great starting point. They are easy to acquire, store, and liquidate when necessary. Premiums on assets like silver eagles are currently near historic lows, making now an opportune time to buy. If storage or liquidity is a concern, ETF like the Sprott Physical Silver Trust provide a convenient alternative, offering exposure to physical silver without the hassle of storage. But the strategy doesn't stop there. Diversification within silver investments is key. Mining stocks, for instance, offer leveraged exposure to silver prices. As prices rise, mining companies often see disproportionate gains, making them an attractive addition for more aggressive portfolios. Additionally, silver's role in green energy and technology makes it a forward-looking investment, aligned with global trends in sustainability and electrification. Rubino also points out that building resilience isn't just about financial assets. It's a holistic approach, which might include investments in farmland, energy stocks, or even self-sufficiency measures like solar power systems. Silver, however, remains a cornerstone, as its versatility makes it an asset that thrives in both inflationary environments and periods of economic innovation. So, are you prepared to take the steps needed to safeguard your financial future? With silver offering unparalleled benefits as both a hedge and a growth opportunity, there's never been a better time to explore its role in building resilience.
Unwise way to address something like this is just to let it metastasize until the crisis is so horrendous that basically people are willing to accept anything from the government in return for the bleeding stopping, and that's historically, that's how it goes most of the time. But what we totally could do is see it coming and just announce a new monetary system. And it would probably be a gold standard at this point in our history, because that's the thing we understand. Humanity has basically been on a gold standard on and off for several hundred years. And if you want to just go back to when gold was just money and that was all there is to it, 3,000 years. So it's possible that we do something like that, where we just say, look, this clearly isn't working and we need to do something else. So let's sit down and let's figure out how to go back to something like the classical gold standard when things basically work. Now, that doesn't mean that's a pain-free transition, because all the people who have cash and government bonds end up seeing their savings be diminished, because you can't go back to a gold standard from here without a big devaluation of the dollar and the euro and the yen. This is probably going to be a worldwide thing when it happens. And so the people that trust the government are hurt badly by this, and probably they take to the streets. Probably there's civil unrest. Probably there's a lot of political turmoil. So it's not an easy thing to get through, but it is something that we could get through without having a dictatorship. We just accept the pain. We do what we can to moderate it, and 3 or 4 or 5 years in, we've got a stable currency. We've got a monetary system that looks like it can exist and grow organically over time. And then we're back on a sustainable path. But it won't be painless. It'll just be less painful in the long run than the alternatives. And that when you screw up on the scale that we've screwed up, minimizing the pain rather than eliminating it is all you can hope for.
Silver isn't just another asset. It's the key to navigating the economic storm that's already brewing. John Rubino's insights tie together the threads of overvalued equities, skyrocketing debt, and geopolitical instability, pointing to one undeniable truth: silver offers a unique and essential hedge against the looming financial crises. Here's why this matters. As stock markets teeter on the edge of a potential collapse, driven by insider sell-offs and record high valuations, and as governments worldwide wrestle with unmanageable debt burdens, silver remains untethered to these vulnerabilities. Its dual role as a safe haven asset and a critical industrial commodity makes it indispensable in a world moving toward green energy and technological advancements. In fact, its industrial demand alone could outpace supply in the near future, amplifying its value. But this isn't just about reacting to crises. It's about positioning yourself for the future. Silver has consistently outperformed during times of economic turmoil, and with its current undervaluation relative to gold, the opportunity for growth is extraordinary. From physical coins to ETF and mining stocks, integrating silver into your portfolio is more than just an investment. It's a shield against the systemic risks that threaten to upend traditional financial systems. The numbers don't lie. Analysts forecast silver prices could surge to $1.40 per ounce in the coming years, and even higher in the face of continued supply deficits and accelerating demand. But beyond the price projections, silver represents a broader strategy, a way to protect and grow your wealth in a world where uncertainty is the only constant. So the question isn't whether silver is a good investment. It's whether you can afford to ignore it. If you're ready to secure your financial future, consider taking the steps today to incorporate silver into your strategy. And remember, this isn't financial advice. It's a call to think critically, act wisely, and build resilience in these unpredictable times. Subscribe to stay ahead of the curve, and let's navigate this journey together.